And welcome to Shriram Finance Limited Q3FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Umesh Revankar, Executive Vice Chairman, Shriram Finance Limited, for his opening remarks. Thank you, and over to you, sir.
Thank you. Good morning, friends from India and Asia, and warm welcome to everyone. Good evening to those who joined from the western part of the world. This is the first earnings call for the merged entity of Shriram Finance Limited. We have with me Mr. Chakravarti, the Managing Director and CEO, Joint Managing Directors Parag, Sundar, Gilani, Sudarshan, Shriram, Nilesh, and Srinivas. And we also have Mr. Ravi Subramaniam, who is the MD and CEO of subsidiary Shriram Housing Finance Limited, and Sanjay Mundra, who is our IR head. First, let me go through the merger update. After nearly 1 year of the announcement of merger, on 13th December 21, we announced the merger. As per the plan, timeline, what we have given, 1 year, we could complete the total merger process. On 5th of December, we officially announced our merger. In fact, we had received a letter order from NCLT on 9th, but for us to complete the other formalities and announce, it took some time. For the shares and for security trading, it started from December 28th after necessary formalities with the exchanges. Meanwhile, we had prepared ourselves well with from April itself. In the beginning of the financial year, we had planned the integration, and we had put 5 joint managing directors in respective geographies to manage the business as a combined entity. And that preparation has helped us well in running a few pilots for the various products. Today, out of 2,900 branches, I can say that around 85% of the branches, we have at least run one additional product. Depending upon the geography, depending upon the local needs, we have been trying to push the one additional product of each other companies, and that has been successfully done. As far as the larger ticket lending on a commercial vehicle and SME, we are taking a little more time because this needs to be done on more concentrated and better supervised way, and underwriting part of it is done centrally in some of this location. So we will be taking a little more time in rolling out large ticket products across India over the next 1 year. Meanwhile, Indian economy is growing well, and last quarter it recorded a 6.3% GDP growth. Overall, for the first half, it is 9.7%. And as per the estimate, it is likely to be around 6.9%. Yesterday, the government economic survey has indicated that it will be around 7% for this year, and maybe 6.6% going forward for next year. That itself is will make India the growth engine of the world. India will be growing the fastest among all the countries. The inflation worry was there for some time, nearly 6 months now, mainly because of various commodity prices going up, fuel price going up, and also the geopolitical tension. But now in India, the inflation numbers have come down significantly. December numbers, they're at 5.72, which is below the 6% upper limit of RBI. And also WPI has come down to 4.95. And if last December it was 14.27. So there is a substantial improvement in the WPI numbers. So it should help us in moderating our liability cost. The RBI monetary policy also MPC had hiked the repo rate by 35 basis points, and at present it is 6.25. And we expect maybe another rate hike, a modest rate hike, or with inflation number being there, it may not increase. That is a possibility. The GST collection is robust. In fact, today morning, if you have gone through, the GST collection, January GST collection is 1.56 lakh crore. And with steady 1,45,000 crore above collection for the last few months, we believe the government spend on infrastructure will continue. With the infrastructure spend continuing, our segments, especially commercial vehicle and construction-related activity, will continue to grow. Is what we strongly believe. The private capital is something which is not coming the way we expected. But this financial year, government seems to be confident. With yesterday's report on the government economic survey suggests that private capital is likely to come in a reasonable way this financial year. The agri and rural economy has been doing very well. If you look at India's agri growth for last 3 years, India is blessed with good climate, good rain for the last 3 to 4 years, and that is really helping with the various programs of government supporting the agri income growth and also direct credit to the farmers. That also is helping. There are some numbers which suggest the government has announced that totally 2.16 lakh crore has been deposited directly into the bank accounts of farmers under Pradhan Mantri Fasal Bima Yojana. And 1.24 lakh crore has been given to farmers in lieu of crop loss. So this augurs well for the rural economy and to the income of the rural area. And government also has announced its plans to convert around 3.25 lakh fertilizer shops across the country as Pradhan Mantri Kisan Samriddhi Kendra. These measures will definitely help the rural economy to be steady and consumption in the rural economy to grow. Coming to the auto industry, overall commercial vehicle sales have gone up by 16.6% to 2,27,111 units in Q3 against 1,94,709 units in Q3/22. The heavy vehicle sales out of it is 6,83,000. It is 46.4% higher for the 9 months period compared to 4,66,760. The heavy vehicles have been growing much faster at 33% over the previous quarter, and LCV have been growing at 8.2%. Three-wheeler is showing a robust growth of 67%. I believe it is mainly because of the expansion of e-commerce activity e-commerce is expected to grow 18% through 2025. That means the e-commerce is likely to reach to tier 2, 3 towns, including all pin codes that's available. Maybe that's where the e-commerce is going to play a major role in the last mile reach and the transportation part of it. The earth moving and construction equipments also are growing very healthy at 26%. Tractor sales have grown by 23% to 2,09,918 units in Q3 versus previous year same period of 1,69,835. So two-wheeler also has been growing at 38,59,030 units at 6.3% growth for the 9 months period. So which indicates that the overall there's buoyancy demand in the urban and rural market. And now more to come to the current quarter performance, I'll hand over my Mr. Chakravarti, my colleague.
Thank you. And I welcome all to the first earnings call of Shriram Finance Limited for the third quarter of financial year 23. I trust you had the opportunity to look at the investor presentation that we have put out. And as Shriram mentioned in his opening remarks, financial year 23 has been a eventful year for us because of the merger, and all credit to our business and back office teams that this merger has been concluded quickly. I would also request you to note that the corresponding figures, corresponding previous year figures are not comparable, as the merger was effective. The merger effective date is 1st April 2022. On the operational metrics, we clocked a disbursement growth of 29,245.26 crores as against 22,931.70 crores in the same period of the previous year, and as against 25,789.32 crores in Q2 financial year 23. Our assets under management stands at 1,37,98.
Sir, I'm sorry to interrupt. Can you please repeat your last line, sir? There is a slight static on the line.
Okay. Our asset under management stands at 1,77,498.17 crores as compared to 1,56,848.63 crores in the previous year, and increased by 13.17% as compared to 1,69,358.2 crores in quarter 2 FY23. Net interest income stands at 4,427.88 crores as against 2,387.97 crores in the same period of previous year, and as against 4,104.86 crores in Q2 FY23. Our net interest margin was 8.52% as against 6.65% in the same period of previous year and 8.26% in Q2 FY23. Profit after tax stands at 1,776.97 crores in quarter 3 FY23 compared to 680.62 crores in quarter 3 FY22, and as against 1,555.11 crores in Q2 FY23. Our earnings per share stood at 47.46 rupees as against rupees 25.26 in the quarter Q3 FY22 and rupees 41.53 in Q2 FY23. Gross stage 3 declined by 2 basis points and net stage 3 declined by 12 basis points over Q2 FY2023. And hence gross stage 3 stood at 6.29% compared to 8.4% in Q3 FY22 and 6.31% in Q2 FY23. The net stage 3 stood at 3.2% compared to 4.36% of quarter Q3 FY22 and 3.32% in Q2 FY23. The credit cost for the current quarter stood at 1.75% as against 1.73% for Q2 FY23. The cost to income ratio was 22.29% in this quarter as against 24.5% recorded in Q2 FY23. Now I would like to move on to our subsidiary Shriram Housing Finance Limited. They have registered a disbursement growth of 30.33% to rupees 1,001 crore as against 768 crores in the same period last year and as against 1,049 crores in Q2 FY23. Shriram Housing's assets under management grew by 55.84% to 7,178.16 crores as compared to rupees 4,606.15 crores the previous year and by 9.66% as compared to 6,545.92 crores in Q2 FY23. The net interest income increased by 86.2% to 79.61 crores as against rupees 42.74 crores in the same period of previous year and as against 64.53 crores in Q2 FY23. Profit after tax for Shriram Housing increased by 27.19% to rupees 36.38 crores in Q3 FY23 compared to 28.60 crores in Q3 FY22 and as against rupees 34.03 crores in Q2 FY23. Their earnings per share stood at 1 rupee 12 paisa as against 88 paisa in the quarter Q3 FY22. Shriram Housing's gross stage 3 declined by 37 basis points and net stage 3 declined by 29 basis points over Q2 FY 2023 and accordingly gross stage 3 stood at 1.15% compared to 2.47% in the Q3 FY 22 and 1.52% in Q2 FY 23. The net stage 3 stood at 0.87% compared to 1.99% of quarter Q3 FY22 and 1.16% in Q2 FY23. I shall now request our Whole-Time Director and CFO, Mr. Parag Sharma, to brief you on our fundraising activities and other liability-related matters. After that, our Joint Managing Director, Mr. Sundar, will talk about the accounting aspects. Thank you.
Hello everyone. On the liabilities, total liabilities as of December stood at 1,53,228 crores, broken up into 27% through the term loan, bank loans route, around 23% from FD, with retail FD, 24% is through the domestic bond market, capital market. Securitization is close to 13%, and external commercial borrowing, including bond and loan, is at around 12%. That is the breakup of liabilities. The overall cost is at around 8.77 compared to 8.71 in the previous quarter, up by around 6 basis points. Liability mix might change with more securitization to be done in the coming quarter and also some increase in the bond offering by the company. That will be the two changes. When it comes to mobilization for the quarter, we have mobilized in line with the previous quarters, close to around 12,200 crores of borrowing, with the securitization being the largest contributor at 4,400 crores, followed by retail deposit, which was 4,093 crores. On the ALM front, all buckets, as in past, have been positive, with cumulative surplus up to 1 year being in excess of 30,000 crores. The liquidity coverage ratio is healthy. It is at around 240%. So overall liquidity is 17,400 crores, which is good for meeting our liability repayment for close to around 5 months of liabilities. The leverage ratio is down from 3.9 to 3.63 in the current quarter. Rating agencies have reaffirmed rating of Shriram Finance Limited as AA+. All the 4 rating agencies, CRISIL, KF, ICRA and India Ratings have reaffirmed the rating. So we are confident that this quarter the cost may not go up at 8.77. There should be to reduce it, but we don't expect the cost to go up for sure for this quarter. This I hand over to Sundar for this comment.
Yeah. Hi everyone. Couple of data points. One is that the employees account has increased by 3,536 numbers in the current quarter, with a closing employee count of 60,918. The cost to income ratio has stabilized at around 22.29%, and we expect this to be the trend going forward in a broad band of 22% to 24%. And as you are aware that there was a one-time sales tax write-off which happened in the previous quarter, and hence it was higher at 24.5% in September quarter. And most of the numbers have been already spoken by MD and CFO. And one additional data point is that the LGD for the current quarter of the combined entity is 42.39%, and PD for stage 1 is 7.17%, and PD for stage 2 is 17.4%. And one more additional point which I would like to clarify is that the already reported numbers of STFC and stock in the previous 2 quarters have been restated to take into account some entries relating to the merger fair valuation accounting as per the Ind AS norms. So there may be a difference of around 100 crores in each quarter, and which, if any queries are there, we will be happy to reply to it offline through Mr. Sanjay Mundra. With this, I would like to hand over the call back to the moderator and request the moderator to open the lines for Q&A. Thanks.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. An operator will take your name and announce your turn in the question queue. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants may press star 1 to ask a question. The first question is from the line of Subhranshu Mishra from PhillipCapital. Please go ahead.
Right. Hi, sir. Just quickly, if you can give out the disbursements as per product, and sincere request if it can be part of the presentation going forward, so it will be slightly easier because we have so many products now. That's the only question I have. Thanks.
Okay. The disbursement for the quarter is 29,245 crores, and as against the previous Q2 number of 25,789. And coming to the segment-wise, the commercial vehicle segment, we had done 11,760 crores. The passenger vehicles was 5,057 crores. Construction equipment was 1,808 crores. Farm equipment 527. MSME was 2,870 crores. Two-wheeler 3,230 crores. Gold loans 2,131 crores, and personal loan contributed to 1,842 crores, and others around 17 crores. So this is a broad breakup of the segment-wise disbursements, and we will definitely take your suggestion and then try to incorporate the same in the future presentation. Thanks.
Within CV, sir, what is used and new, sir?
It will be roughly, say, around 10% will be new and the balance will be used.
Sure, sir. Thank you so much.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may please press star and one at this time. We have the next question from the line of Nischint from Kotak Mutual Fund. Please go ahead.
Hi, this is Nischint from Kotak Securities. Just one question to Parag. What gives you confidence that cost of borrowing will not increase next quarter? I think you mentioned that we are at 8.4% and it will not go up from this quarter.
So Nischint, I said it is 8.77. Currently, whatever we are borrowing is at much lower level. We are borrowing it between 8.5 to 8.6. So I don't expect the cost to go up. It can only come down. We did repay some of the high cost debt in the month of October end. So I don't expect, because incremental cost is lower than the on-balance sheet cost as of now. That is the reason I am confident that it will not go up for this quarter.
No, but I would assume that some of the bank borrowing, as you would see the,
bank borrowing is happening at the rate of around 8.5 to 8.65 range only, nothing beyond that. And overall liability cost is around 8.77. That is why I am confident it will not go up.
No, I understand that, but I'm saying that some of the bank borrowings that you're currently having, let's say if something is like, at this point of time at, let's say 7.5 or 7.7%, when it, and I believe this is 1 year, due for repricing. So when it comes for repricing, maybe next month or 2-3 months down the line, then it kind of probably gets repriced at a higher rate, depending on what has been the rise in MCLR in the last 12 months.
Yeah. So there is nothing called annual repricing when it comes to the large borrowing, which is from public sector banks. That is all MCLR linked. And there was nothing at around 7% level. There is no borrowing. All the borrowing put at around MCLR at that point of time will be around 8 to 8.25 only. So I don't expect there will be a major change. We do expect to increase our securitization volumes. We do expect to increase our bond offerings. And even bonds, what we are currently borrowing at, are not at the levels which is the balance sheet cost as of now. That is why I am confident about cost not being there.
So, can you just remind, last quarter, let's look at standalone Shriram Transport. What would have been this cost of borrowing as against 8.77?
The incremental was around 8.25 to 8.30.
Outstanding, if you are at 8.77 in December.
That includes Shriram City Union liabilities also.
Mm-hmm.
And also whatever we have borrowed from the offshore, everything included was 8.77. But incremental, what we have borrowed is between 8.25 to 8.30 range only. That is why I am saying it will not go up.
Sure. And outstanding last quarter only for standalone Shriram Transport would be how much?
That was at around 8.5. 8.54 is what we reported for the September quarter.
Okay, sure. Got it. I think that was my question. Thank you very much.
Thank you. Participants may press star 1 to ask a question. The next question is from the line of Mahrukh Adajania from Nuvama Wealth Management. Please go ahead.
Yeah, hello, good morning. So what is the quantum of one-off and operating expenses?
Yeah, this quarter there was no one-off. The one-off was in the previous quarter of 65 crores, which was on account of write-off of the earlier litigations regarding the sales tax. So there was an amnesty scheme launched by certain state governments, and we had availed of it, and whatever was the amount payable, we had paid and written off in the books of accounts. That amounted to 65 crores in the previous quarter, and that was a one-off. Current quarter there is nothing to this.
And the merger-related expenses, have they come in OPEX?
Yeah, it's the expenses related to merger is around 19 crores, and it will be deferred over a period of 5 years. And whatever is pertaining to the current quarter has already been factored, and it's not significant compared to our size of the expenses.
So it will be deferred over 5 years.
Yeah, correct.
Over every quarter. Okay. And then just in terms of credit cost, so this is where it settles, is it? The Q3 level, is that where it settles now, or how do we look at it going ahead?
Yeah, the credit cost, we always have given indication that it will be around 2%. So this current year it is 1.94 as of for the nine months period, and we should be around 2% any point of time, which is our long-term history. If you go up 10 years back, and also forward-looking also, we have always been indicating that it will be around 2% credit cost.
Got it. And when you expense the intangibles of 100 crore every month, is it tax deductible or it's not?
The intangibles will be testing for impairment, and it's most likely that it will come maybe after a couple of years only, not before that. That is what is our estimation, but it's up to the independent valuer to take a call. But we'll be testing for impairment every year end.
Okay, but whatever is written off through P&L or expense there, is that tax deductible or not?
The goodwill is not tax deductible, but the intangibles, yes, it is tax deductible.
Okay. Okay, thank you so much.
Thank you. The next question is from the line of Param Subramanian from Macquarie. Please go ahead.
Yeah, hi. Thanks for taking my question. So my first question was on understanding this NII that you've reported on the merged basis. So if I just do an addition of the 2Q NII of Shriram Transport and Shriram City Union and compare with what you have reported for pro forma, there's a gap of or an incremental addition of about 180 crores. So could you explain what exactly is adding or giving this delta?
See, as I was telling you in the opening remarks that as per the accounting standard on merger, we have done some fair valuation of the liabilities, the loan that we have borrowed as well as loan that we have given. And roughly around 1,000 crores is the fair value that we have taken a hit at the time of in the opening balance sheet. And the benefit will come over a period of 3 years. Maximum will come in the current year. That's what we were indicating, that it will be around 100 crores per quarter will be the addition to the NII in the next couple of quarters, 3-4 quarters at least. Then it will
100 crore per quarter for the next 3-4 quarters.
Correct, yeah.
Okay. So you said it's a hit to the balance sheet. So how is it giving you credit on the P&L?
No, it is credit to the P&L, and opening balance we have taken a hit. It is a hit against the reserves.
Okay, sir. And what is the corresponding impact on net worth? Because even if I do a net worth comparison, even adjusting for goodwill, is it also adding to your net worth?
The net worth, if you see the standalone STUC and standalone curve as on 31st March, and add your current 9 months profit minus dividend, what we have already paid, and there will be a difference of around 2,800 crores is on account of the goodwill and intangible that we have created, which is kept as an asset. That is the difference.
Okay, so goodwill is 1,400 and the remaining 1,400 is also...
it is 1,300 is the goodwill and 1,500 is the intangibles. And this will primarily have been bifurcated to get a benefit of tax claim, at least as far as this is concerned. And it is supported by independent valuers, assessment and all those things. And the charge to P&L may happen maybe after the next couple of years, not before that.
Got it. So if I can just ask, so, considering the one-off that we are seeing, post-merger in the P&L currently, so what is the sustainable level of ROA and ROE? So this time you're reporting 3.4% ROA, but what is on a sustainable basis, what do you think, where should these numbers stand? Yeah, that's my last question. Thank you.
3% on a long-term basis, and ROE will be anywhere between 16 to 18%, depending upon the environment.
Okay, sir. Thank you so much. Yeah. Thank you.
Thank you. The next question is from the line of Umang Shah from Kotak Mahindra AMC. Please go ahead.
Yeah, hi. Good morning. Thanks for taking my question and congratulations on a good quarter and the merger. Sir, a couple of questions. One is on the merger-related expenses. Just wanted to reconfirm the expenses which you mentioned were just about 19 odd crores, is it?
Yeah, 19 crores.
Okay. And if I recall correctly, initially when the merger was announced, we were anticipating some merger-related cost to the tune of about anywhere between 200 to 300 odd crores. Does that still stand, or has that number gotten revised downwards?
When we announced the merger at the time, there was a likelihood of an amendment in the Stamp Duty Act in Tamil Nadu. And foreseeing that, we had indicated that it will be around 200 to 300 crores. However, as on date, also the amendment has not taken place. And since our merger is already in place, so there is unlikely that there will be a retrospective impact on the same. And hence, the management is confident that no further expenses on account of stamp duty is applicable to the company.
Okay, understood. Fair point. So the other question was on the growth outlook and ideally how should we now look at our AUM mix shaping up progressively, maybe a year or 2 years out from here? Should we assume that the share of vehicle finance business gradually just keeps coming off in the overall mix, or how should we look at it? And what's broadly the growth outlook over next 12 to 18 months?
See, the overall AUM growth, which we had earlier indicated of 15% CAGR growth, should continue, is what we feel very confidently, because Indian economy is growing, and with this growth, 15% CAGR growth is a possibility. We are leaders in commercial vehicle and two-wheeler, so our leadership will continue to remain. We are trying to reach out for SME business in the geographies which we have not been servicing till now. Earlier, the SME lending was focused mostly in the south and the western part. Rest of India, even though there is enough growth opportunity in SME business, especially large states like UP, MP, Rajasthan, and Punjab, Haryana, we have not been doing much. So, with branch network being available today across and having the experience and the expertise of both customers and the expertise of doing SME business in the southern and western part, we would be expanding it. So there cannot be significant shift in overall ratios, but slowly and steadily SME growth will be much faster than the CV and two-wheeler is what we feel. So it may not alter immediately in 2 years, but over the 10 years you can expect, because SME industry is so large and ability to reach out to these sectors and segments through the branch network is possible. So next 2 years there may not be a big change, marginal change, but over the 10 years there will be significant change.
Understood. And on the cost to income, just to reconfirm, in our opening comments we mentioned that the steady state cost to income ratio should be closer to about 22, 23 odd percent. Did I hear that right? Well, currently we are at about 26, 27 odd percent.
Yeah, we had earlier said 26%, but this quarter it has been 22.45. But in the long run, it will be around 24, 25.
Okay. Okay. All right. And just last one, on the housing finance side, now that the merger is behind us, how should we look at it? Will that continue to operate as a wholly owned subsidiary, or at some point of time we look at some sort of a value unlocking happening in via that subsidiary or a separate listing, something, any plans on that front?
No such plans. It will continue to run as a wholly owned subsidiary.
So it is not wholly owned, it is 85% stake is with
85%.
Sorry, yeah, 85%. Okay. All right. Thank you so much. Thanks for patiently answering my questions.
Thank you. The next question is from the line of Shweta from Elara Capital. Please go ahead.
Thank you, sir, for the opportunity and congratulations on great quarter. So I just have one question. What are the cross-sell opportunities you see deriving across products due to synergistic benefits?
Can you repeat it? Couldn't hear it.
So what cross-sell opportunities across products do you see that you can derive from these synergistic benefits due to merger?
Okay, see, we have the two businesses, if you look at the Shriram City Union businesses, they were mostly in the south and western part. They did not have reach across the country. Now with the Shriram Transport branch and the experience in these geographies being available, you would be able to take the Shriram City Union product across all the geography. So that loan products get expanded in the both sides. Even in Shriram City Union branches, you will be able to offer CD and construction equipment on agricultural equipment lending. So we will be expanding the loan product across all branches and all products depending upon the potential in each of the geographies. So that is the synergy benefit. Additionally, since we have a large customer base, we would be able to cross-sell insurance and other investment products. Apart from sourcing deposits, we would be able to cross-sell insurance and other investment products. That will give us additional fee income. So that is the total synergy.
Sure, thank you.
Thank you. The next question is from the line of Abhijit Tibrewal from Motilal Oswal Financial Services. Please go ahead.
Yes, good morning and thanks for taking my question. So again, just going back to the merger-related OPEX, merger-related expenses, I was just going through the call that we had hosted at the time when we announced the merger. That point in time, our expectation was, including the stamp duty cost, which is not there, something around 350 crores. So, is it that, merger-related expenses are actually coming much lower than what we anticipated, though you already said that we are not required to pay that stamp duty that we anticipated of about 190-200 crores. But other than that, I think we talked about HR integration cost of about 60-70 crores, branding and advertisement costs of about 70 crores. So those expenses have not really come in, or they are being capitalized now and they will be expensed over the next 2 years.
When we guided 1 year back, we had expected a high stamp duty expenses, which is not there now, as I had mentioned in to the previous caller. And when it comes to the other expenses, the 19 crores that we are talking about is the advisors and immediate merger-related expenses, which has been deferred over a period of 5 years. And the advertisement and other charges will be an ongoing thing, which will be debited to the P&L as and when it is incurred. And the cost of advertising, which we had guided maybe around 50 to 100 crores, will be happening over a period of time. And it is not already happened.
Got it. And your guidance of 24-25% cost to income ratio takes that into account.
Yeah, it takes into account. Yeah.
Got it. Sir, just one more question here. Just wanted to understand. Though it's one merged entity now, the branding is Shriram Finance. But wanted to understand there are still employees who were part of either Shriram Transport or Shriram City, and who were maybe people who understood the respective products a whole lot better. So, what incentives have been put in place to drive this cross-selling?
Incentive programs are our business model. If you look at all our field and branch team, is where the variable component is quite high. So both in Shriram Transport and Shriram City Union business model, that was factored in, and that's how we have been functioning. So same thing is continuing. The incentives would be given for own product and also a cross-selling product. is whether it is insurance or whether it is an investment product tomorrow or whether it is a multi-product today. The variable component will continue to play a major role in our business model.
Got it, sir. This is useful, and thank you and all the best.
Thank you. The next question is from the line of Uday Pai from Investec. Please go ahead.
Hello, good morning, and thank you for the opportunity. Can you quantify the amount of interest expense saved on account of buyback done in October?
Okay, we don't have the number right now. You can just touch base with Mr. Mundra. He will help you out offline.
Okay, sir. Thank you.
Thank you. The next question is from the line of Rahul Jain from Goldman Sachs. Please go ahead.
Yeah, hi. Good morning, everyone. Just 2 or 3 questions. Number one, on this cross-selling bit, can you give us an indicative sense as to how the loan book could look like a couple of years down the line? Would the CV proportion come down over a period of time as the other products we cross-sell to other customers?
Rahul, I think I just answered it just 5-10 minutes before. See, we are leaders in CV and two-wheelers, so there it will not change much. Overall ratio will remain. The SME focus will increase because SME business, which we are mostly doing in the southern part, will be taking to the rest of India, and scope and opportunity to grow will be faster. So we may grow there at around 20-25%, where in other businesses we may still grow at 14-15%. So it will not alter in years. Yeah.
Yeah, the mix won't.
Yeah.
Understood. Okay, got it. The other question was on goodwill. So over how many years will this goodwill need to be written off?
The goodwill will be tested for impairment by an independent valuer, and basis that it will be provided. But the management feels that at least for the next 2 years, there will not be any impairment on this count.
Okay, got it. Thanks. The other question was on cost of funds in Shriram City Union. Would there be any benefit if there's any rating upgrades? I mean, of course, now you'll borrow in Shriram Transport, but the incremental borrowing should be a lot lower on that portfolio also, right? As you do disbursements in the Shriram City Union portfolio. How much benefit can we get out of that?
Yeah, but Shriram City Union was AA, and now the liability will get repriced to AA plus level. So there should be 25 to 30 basis points benefit, which will come out of repricing of Shriram City Union liabilities.
Okay, and then that's the reason why next year you're saying cost of funds would not increase much. I mean, some benefit will come from here as well. Is that a fair understanding?
I said for the March quarter it will not go up. But if RBI increases rate, that has to be then tested for next year. But this quarter I don't expect the question.
Got it. Just a last question in terms of the fair value that you were talking about earlier. Can you explain how do you arrive at this? Is there an element of NPV calculation also that goes in there, and that's why you had to sort of adjust the book by 1,000 crores, or there is something else?
You see, the last quarter, that is March quarter of 22, whatever was the loans disbursed and loans liabilities mobilized, the benchmark rate is considered and it is repaid for the earlier entire book. And based on the NPV calculation, the fair valuation arrived.
Okay, got it. All right, that's it from me, and good luck for the future quarters. Thank you again.
Thank you. The next question is from the line of Ankur Jain, an individual investor. Please go ahead.
Hi, good morning. I have a question on capital allocation. So Shriram Finance has paid an interim dividend of 15 rupees, and in the past, both Shriram Transport and Shriram City Union have given healthy dividends. So my question is, has the management thought about the idea of doing a buyback with some part of the money, which could be more beneficial to the shareholders? Thank you.
I say finance companies or banks normally don't do any buybacks because the capital is always required in the business.
Okay, even with the large amounts that you are paying which are not required, because ultimately they are being paid to the shareholders?
So dividend is expectation. There are some shareholders who are invested for a steady dividend. So that is a different aspect altogether. So rewarding shareholders continuously with good dividend is a part of a good governance and also appreciating the shareholders. Yeah, that's all.
Okay, thank you. That was my only question.
Thank you. The next question is from the line of Chandrasekhar Sridhar from Fidelity International. Please go ahead.
Hi, good morning. I have a few questions. Parag, just how do you think of liquidity right now? So, as I see, I think on the merged entity also the excess liquidity has actually stayed constant as you've moved on and you've actually cut it by 1 month. How do you see that over on a sustainable basis? One. Second is Shriram City Union had a liability duration which had extended pretty reasonably over the last few years. Much longer than the asset duration. Now that we're working on a merged entity, how do you just think on liability durations given you have a merged balance sheet? For Mr. Sundar, I have a couple of questions. One is, I understand the fair valuation, but if I look at the GNPLs also on a combined basis, I mean, the pro forma numbers and the GNPLs also, there's a difference of 40-50 bps. So what would explain the differential in the GNPLs? And so Mr. Ravi, just in Shriram Housing, was there any portfolio buyout done during the quarter? Thank you.
Yeah, on liquidity, we always had a stated policy of maintaining 3 months of liability repayment as liquidity buffer, which we enhanced during the COVID period to 6 months. Now we are around 5 months, but I think we'll continue with this liquidity buffer of 17,000 till the March quarter, and then based on market scenario, we will look at diluting it or continue to maintain slightly higher liquidity. But as of now, till March quarter, I think we'll continue to have 17,000 crores of liquidity. When it comes to duration, I think duration in Shriram Transport also of the assets is not longer. It is used vehicle is typically 3 to 4 years. So there is not too much of duration difference which comes because of Shriram. And Shriram Transport also the liability was longer than the assets. So that doesn't change. Sundar.
Yeah. Coming to the gross stage 3 numbers, if you recollect the AUM of Shriram City Union Finance as on 31st March was 33,000 crores, and they were carrying an ECL provision of close to slightly more than 2,000 crores. So net 31,000 was acquired by Shriram Transport by way of the merger transaction, and this 31,000 was accounted as an loan outstanding from the customers, and hence this amount is added to the gross stage 3. And you would find that the normalized, if you take 1 plus 1, had it been taken as a gross level of 33,000, the NPA would have been at around 25 bps higher than what we are reporting. And that explains the reduced number of the gross stage 3 of 6.29 in the current quarter. The same thing has been restated in the previous quarters also.
Okay, got it.
And on the housing finance side, out of the 1,000 crores gross disbursement, the bought out portfolio is about 6 crores. Hardly anything. Very small.
Okay. Sure. Maybe if I could just follow up with a couple of more questions. Umesh, one is just how do we think of just right pricing now? How much you're charging to the insurance business on a sustainable basis. This had stepped up like a couple of years back, but didn't seem to go anywhere after that. What's your thoughts on that? And second is, we are still carrying a COVID provision buffer at this point in time. Now, this provision, the buffers were created in Q4 FY20 and Q1 FY21, and then some later. Now, obviously, the contracts are and our understanding was, they'll be utilized over a period of time once the contracts mature. Given the duration of the book, the contract should be maturing by now, but they're still carrying a large buffer and they utilize very little. So what do we think of some of these provision buffers which we're carrying?
Yeah. See, as far as the insurance is concerned, the insurance cross-sell is done to help the customer to get better claims and quicker claims. That is the main objective. The earning out of it, the commission earning out of the insurance, whatever is statutorily available or can be given, that we are getting from the insurance companies, both life and general business. So our focus has been to provide better service to customers. For example, earlier we used to get claims on accident at around 180 to 200 days, after 180 to 200 days, putting customer into a lot of difficulties. By providing them insurance service now in-house, we are able to get the claim in 20 days. So that is the benefit customer gets, and indirectly company benefits because of quick settlement of the claim. So there is no NPA due to, or there is no delay due to the claim being delayed. So that is the biggest advantage. So the benefit will improve over the period as we penetrate more. Today the penetration level of insurance cross-sell is much lower, both life and general. Once we increase it across, then benefit will get more pronounced. Then our bottom line will reflect very healthy growth in the fee income.
And on the COVID provisioning, we had created a provision of 2,850 crores in Shriram Transport books. And as we have been guiding everyone that it has been allocated to the respective contracts, and as and when the contract settle, it will be written back or charged off, is what we have been indicating. And as on 31st December, an outstanding of 1,651 crores is available in the books. And we expect this to be cleared maybe in the next 1 year or so. By March 24, maximum will come out.
But that should actually extend beyond the contract duration, right? Given the duration of the book, by now that should have been flushed out, right? Was my understanding.
No. See, if you recollect, we had also given a moratorium of 6 months, and hence the entire book was postponed by 6 months. So in normal scenario, it would have been maximum should come to an end by September 23. So that is likely to be pushed beyond close to March 24. So this I'm saying majority of the book, but still there can be some provision lying still.
Thank you.
Thank you. The next follow-up question is from the line of Nischint from Kotak Securities. Please go ahead.
Can you share what was the absolute valuation of Shriram City considered during the merger? If you can share the number in rupees 1,000 crores.
Yeah, Nischint, I'll just take this question offline and give it to you.
Okay, sure, perfect. Thank you.
Thanks.
Thank you. The next follow-up question is from the line of Mahrukh Adajania from Nuvama Wealth Management. Please go ahead.
Yeah, hi. Thank you for the follow-up. So sorry, but can you please quantify the fair value gains in NII and then through other line items of the P&L in this quarter?
The fair valuation gains in the current quarter. Okay, I'll do one thing. I'll just send it across through Sanjay. Both the impact on the PAT as well as the NII.
Okay, and it's okay. Thank you.
Thank you. As that was the last question for today, I would now like to hand the conference over to Mr. Umesh Revankar, Executive Vice Chairman, Shriram Finance Limited, for his closing comments. Over to you, sir.
Thank you all for joining this call. We had a good set of numbers in this quarter. And going forward, we feel that fourth quarter should be equally good or maybe even larger because demand seems to be quite good in the fourth quarter. And going forward also, we feel that since all the merger-related integration issues are addressed, we should be able to continue to grow and do our business very comfortably and keep growing our bottom line and good progress. Thank you very much.
Thank you, sir. Ladies and gentlemen, on behalf of Shriram Finance Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.